Good morning, YouTube. Louis here, and today I'm going to look at the potential for recession and possibly severe recession. I'm going to start off on this video here, which I will link. This is Danielle DiMartino Booth talking about Fed emergency rate cuts and the state of the economy, the employment market, the stock market, etc. And I think it's a very good video, and I think it's echoed by several other respected people on Wall Street, that all the signs are that we are headed into a recession and could possibly be a severe recession. And she makes the point of unemployment rising and will be rising further. She makes the point of margins getting squeezed on big companies, and the fact that the consumer cannot afford what they're paying. So she sees disinflation in the short term, and that'll put a squeeze on the companies. That'll bring down their profit margins. Also, we all know the consumer is very overextended and their incomes are not keeping up with inflation. You couple that with the housing market, which is unaffordable and is due to pull back here, it seems, and various other metrics which are very compelling to tell us that the market, the stock market, is probably going to roll over and roll over hard. Now, what I equate that to is I'm going to go back to the great financial crisis of 2008, where markets were cut dramatically, housing prices were cut dramatically, and see what that did to silver during that period. So follow along with me here and see what you think. Okay, this is the S&P 500, and the chart I've pulled up on E-Trade is the 2008 chart. It started rolling over in late 2007, and by April, well, let's say by March 2008, it took its first dip. I'd say that that is pretty equivalent to where we are right now in the stock market. Then there's a dead cat bounce, and then by June 2008, we begin a decline that ends, I don't have the prices on here, but roughly 50% down by February 2009. So in a year, or no, possibly in May through March, possibly in 10 months, we could see the market decline as much as, let me see if I can pull this over so you can see the dates. We could see the market decline by, let's see, from a high, we were at a high at 1550 and a low here of 735, so that's a 50% haircut. If you think that we may be repeating something like the 2008 great financial crisis, which incorporated stocks and incorporated real estate as well. And I think we are heading up to something like that. So the logical thing to do is see what happened to silver. I'm going to exclude gold for the moment and just look at silver, because a lot of us hold a lot of silver. And here we are with the price of silver. And let's go back to 2008, right around March 2008. There we go. Okay, we're somewhere in here. Now, silver made a run very similar to the run that we have just had. This one went from $13 to $19. That is not unlike the run from $20 to $33. All right, but what happened in March? In March, we peaked at $20, and I remember this period because I was buying heavily, and I thought we were going to break out. But then the stock market rolled over, and it rolled over so hard that silver was cut back all the way down to about $10. So a 50% haircut in silver once the market started selling off hard. Now, that did not last long, and nobody was able to buy silver at $10. The premiums increased. And, I don't think you'd be able to buy silver at a 50% discount if that happened. But nonetheless, the history from the great financial crisis, and that doesn't mean that we're going to have one. We could have a small recession anything could happen here, but there's potential for a 50% haircut in spot price. Now, the other thing to realize is this was so short-lived. Let's go back to the S&P 500, and from the bottom in February, February 2009, it took 4 years for the stock market to recover. 4 years. How long did it take silver to recover? From 2009 to, let's see, we had the big dip here. So the top was at March 2008. By July 2010, so that is, let's see, 9 months, I don't know, 2.5 years. Let's see, let's go. The top was March 2008, and it recovered by, let's go right there, August 2010. So that is about 2.5 years. So silver recovered in a much shorter time period, and actually the spike, you know, if you consider the spike, if you cut the spike off the top and you cut the spike off the bottom, really silver was holding its own by August 2009, had come back substantially. And then when the economy started to recover, and I think that would be around 2010, let's go back to 2010 in this chart, let's call it about July 2010, the economy started to recover, and we had significant increases over time. But silver recovered first, and after it did, and after the economy started rolling again, silver made its big spike up to $50. It may not show it here on a closing chart for the month. But, and I like to, you know, we talk a lot about the Hunt brothers going back 40, 50 years. I like to throw that out because I think that was an aberration. But this last spike, in subsequent to the great financial crisis, was a very real spike. Okay, and when we look at you know, silver prices equated for inflation, I don't like to go back to, you know, 1980. I think that's a fool's errand. But you know, clearly we had a $50 price, you know, here in 2011, and on an inflation adjusted basis, so I imagine that would be $80 or something like that. You can do the math on that. So what else do I want to show you? So I think that given where we are on the S&P, right around here, consistent with May 2008, if you think the market is going to roll over for all those reasons, and you think we're setting up for a 20, 30, 40, 50% haircut, I think we need to be prepared for a sell-off. That is my conclusion right now. That doesn't mean that we couldn't spike up to $40 before that happens, or 36 or 37. But if the market rolls over hard, I think we ought to expect a drawdown in silver. Now, I'll be right back with the reasons why I could be wrong. All right, reasons I could be wrong about a haircut in silver coming up. In this case, you know, like I said, we were at $20. We had broken out, and it looked like good times ahead back in 2008. And we turned around and we were at $10. Now, I don't think anything that dramatic will happen. Let me tell you why. All right, first off, you know, there is a deficit in silver supply. Demand exceeds supply by quite a bit. All right. The other reason is, of course, in a recession, you know, demand will drop, and perhaps that will calibrate or equalize somewhat. But I don't think that demand will go below supply. The other reason I think supply will be constrained is in a recession, you know, the majority of silver produced does not come from primary silver mines. The majority of silver produced is a byproduct of other mining, copper, zinc, gold, etc. So when recession hits, the demand for all those commodities will drop. What will also drop? The supply, the demand will drop, and therefore they will curtail production, and the supply of silver as a byproduct will drop, right? So there will be less silver on the market, and certainly as prices fall even further, even primary silver mines will slow down production, lay off staff, etc. So I don't think that we will see supply exceed demand, which we probably did see back in 2008. I believe we were in a surplus back in 2008. So therefore, I think the drop will be muted. We also have gold, obviously a tier one asset, pulling silver up, and that'll help as well. But I would think that if we had this sell-off here, in this case from $20, I would think it would arrest somewhere around 15. That would be a 25% haircut. So I think we could see, if the recession and the stock market crash accelerates, I think we could see 25% off of the top of maybe $35 silver if we have one more push. But where are we at right now? 33. Nice healthy price for silver. Nobody can complain about that price unless you're a victim of the former silver squeeze and paid those high premiums. For the most part, people are in the money on silver. If we had a 25% haircut off of 33, let's see, that would be 3, 6, $7 or $8. So that tells me $7 or $8 off 33 could put you at 28, could put you maybe 27. Something like that could be right around the corner. And again, this is what happened in the Great Recession. All right, it was a serious recession. People lost their homes. It was catastrophic. Perhaps we don't see anything that horrible. Perhaps we do. But if you do think that could happen, then what would you do? Well, first you'd get out of the stock market, right? You would go to liquid assets mostly. Short-term treasuries would be just fine, I think. The second thing you would do is start raising cash for a potential drop in silver prices. Because what happened immediately after that, those that were able to buy in during the next year and a half, got some smoking deals, not at $10, right? But anyway, $14 silver was very common, $15 silver. And then when the economy came back, when everything, industry started to roll back, whether it's here or it's abroad, regardless of what's happening in China, you can see what naturally happened to the price of silver, and everybody knows we hit $50, right? So I guess what I'm saying here is I would raise some cash at this juncture. I might even sell some silver at this juncture, and build a little stockpile of cash if we have the sell-off. Then I would acquire at lower prices and wait for silver to go from $28 to... Well, let's see, if we had, from 20, we went from 20 as the high up to 50, that is 150%, 150% on top of $33 silver would put you maybe at $80 or so. So I think that is what is around the corner. But I think right now, we're going to have a dip, and we could have a blow off top before we do, to give you a chance to sell some if you want to do that. If you just want to wait it out, then I think good times are maybe a couple years ahead. But I'm changing my conclusion that I think silver is going to make its move more rapidly as a result of the gold move and the high GSR. I think that we'll see both silver and gold come down, silver possibly to a greater extent than gold, in a severe market crash, right? But then hold on for a couple of years and you could see $80 silver. So I don't want to ignore this period here where really bad things happened. People lost their homes. It was kind of a great reset, if you will. Property prices, declined by 50% in some places. And as you can see, silver did the same thing. It was, as on a spot basis, it was down 50. But with short supply, increasing demand for solar panels and other essential uses of silver, I don't think that'll last long. It may not last 2 years. It may only last 9 months. Who knows? But I think a dip is coming, and I think you ought to raise some cash for that. Just my opinion right now. I know I am a permabull when it comes to silver, and I do believe in it, but this video that I've watched and several others that I've been studying about the stock market and the economy lead me to believe that we are in for a very rough ride here over 2025. And it's probably unlikely that silver will bust all-time highs while that is happening, because it is an industrial metal. All right, and gold will do whatever gold does, but in the last big sell-off, the pandemic sell-off, for example, both gold and silver took a hit as people were searching for liquidity. So we could find that we are potentially at a top here in both gold and silver. And I know that's not what you want to hear. I'll probably get a lot of thumbs down. But the more I think about it, the more I think you should be raising cash for a potential dip in metals prices. And I would never sell all my metals. I wouldn't even sell half, right? Because that is SHTF, total protection. But at the same time, I don't know that I would be acquiring at these levels. All right, that's my new opinion, and let me know what you think. Thanks, guys.